Uh-oh. Something blinked. Good morning, friends, Romans, countrymen. Lend me your ear. Let me make sure I got a good title on this thing. I started it before I even got the edit done. Let's see here. Huh, they don't even show me anything. Okay. I don't even know what the title of my live stream is because I can't see it. It may say PM session, New York. Yeah, there it is. There's my title. Alright, so we got to edit this to the algorithm seems to like these titles where I put in money. So let's try that. There we go. All right. So everything looks right. Let's get into this stuff. I want to talk first about Friday's price action. And we're going to put our lines on the chart. We'll go over NQ first. There's rules about gap fills. If you did not watch my video from last week, let's do this, and I'll just show you on my YouTube where it is. There's my channel. There we go. This one, trading micro silver. I went over this setup that I've kind of modified my trading plan a little bit. I've been focusing on the breaker very heavily, and it doesn't always work out that the breaker validates the way I want to, and I end up not trading as well as I would like to because the market didn't do exactly what I wanted it to do. And so I've loosened up a little bit on making sure the breaker gets validated and stuff, and this video shows what I'm now looking for, and I'll go over it as well on the chart. Okay, so I wish I would have just kept that other one. So there's two configurations. If the market, this line is kind of not necessary. If the market is going down, we want to see a configuration where we have a higher low and then we go and run this liquidity. It may be 10 points, it may be 100 points, but that's the configuration we want to see. And I can change these all to red so we'll know that the market is going down in this situation. And if the market is going the other direction, if it's going up, I guess we could just extend this, but we'll do it over here. So the market is going up. We want to see the market come down and then go back up and fail to move any higher and then come down and run the lower liquidity. which this would be sell side. So on this one, we're running buy side, this one we're running sell side. And like I said, this could be 100 points to here, it could be 10 points to there. You just don't know. But that's the configuration we're looking for, regardless if there is a 1 minute breaker that's been respected or whatever. You can still use that as confluence. It is, sometimes it touches it to the tick, so it is a very important feature, but sometimes I get caught up in the noise demanding that happen. So let's look at this 5 minute chart right here on NQ from Friday. So we opened below a 4-hour high. So right there is like, okay, we're looking for a reversal pattern to the upside. This gap has a 70% chance of filling at least halfway. Okay, so you have to keep that in mind. And so at that point, when the market opens, I'm looking for a higher low here and a push up to fill this gap at least halfway. We didn't even get to the halfway point, which to me showed weakness. Okay, so there we are. Here's halfway. We made it just a little bit above 25% of that gap, and then we started pushing lower. So we went up, came down, made a lower low, pushed up and took this liquidity, and then this one's a little lower than that one. So that is a lower high. And then we pulled away with a fair value gap on the 5 minute chart. So we have a gap that failed to fill in the first 30 minutes. We aren't quite through the first 30 minutes. And a pull away with a fair value gap on that 5 minute chart. So that to me said, yeah, we're going south for a while. Let's make this bigger where we can see it better. Now let's look at a 1 minute chart. And let's see that same configuration. We went up, we pulled down and swept this lower liquidity, making a lower low, and then we tried to go higher. All we ran was this, and then we pulled away with a fair value gap. Now at that point, this could be a range. It could stop here. So I wanted this low to get taken and a fair value gap pushing below it. But this could have been an entry if you were really eager to get in. But here would be your better entry. And then we're just going to aim for a most recent swing, the 4 hour. There's a 4 hour low here, a 4 hour low here, 75% of last week here, and last week's low was all the way down here. And that's what we ended up taking up. And then this big gray box is a regular trading hour gap in the price action from a long time ago. You got to go all the way back here to see it. But there was a particular day that we opened right here. We opened above the market, filled half the gap, and then went up and kind of just stayed steady the rest of the time. There, consolidated the rest of the time, but we did fill half of that gap. But we left this lower portion of the gap. When we came down today, look at that low right here. Right there. I'm going to put a line on it. You think the market isn't run by an algorithm and is running toward liquidity. This section right here has not been traded in. And I'm just going to leave that line that color so we'll be able to see it when we get over there. But look at where it took it out on Friday. Why didn't we fill the gap? We took out that low that I just marked. I'll make it a little bit different color so we can differentiate. We took out that low that I just marked, and then we started trading higher. Went back to 75% of the week. Came back down and touched the center of that RTH gap. Pretty much to the tick to end the day. But that, when you're looking for this setup, higher low and then a run on that liquidity, and you don't see it, especially early in the day, that's your signal to we didn't take out that high, we need to start looking for a short. We didn't even fill half the gap, we need to start looking for a short. Okay, so that worked out for me. I ended up making a little over $900 this day. didn't trade much in the afternoon. But once we got down here and we did fill half of this gap and take out that liquidity from the day it did go to half the gap, we came up, we made a higher low, and we pulled away with a fair value gap. Now, this to me could still be a consolidation or a range. So we could take out that high and then come right back down and take out the lows. So to me, this isn't enough confirmation because we've just been chopping around here. When we come back down here and we sweep that and we go work into this fair value gap and then push away with a fair value gap again, which would be right here, that's your entry, and you ride it at least to that high, at very least to that high. That's a lot of points because NQ was moving big time this day. So let's say we entered right there. That's 80 points to right there. One micro, $160. And I did take these trades, but because NQ was moving so fast like that, I took it on ES and I added to my total. I think I only made like 600 on the way down, and then I added another 300 on this little run up on ES. And I'm just trading micros. If I was trading the bigger contracts, the numbers would be much bigger. But I'm trying to keep my risk low by trading the micros, and so I don't blow up my account. It's working so far. Once we got up here to this 75% of last week, let's look at our configuration here. It's a little bit choppier, and it usually is in the afternoon. But we took a level. I think there was a high on we left this high. We left it. Which is kind of like, we could go take that thing. But we came down, we made a lower high. This one we swept that liquidity, but still lower high overall, and then we pulled away. This could still be a range at this point, but when we broke below right here, you're good to aim for at least this point right here. So you could get in here and aim for there. Not a lot of points. Don't even know if it's worth it at that time of day. But that would have got you 22 points on NQ. And if you aim for this low, you would have gotten it as well. I think. Yeah, you would have gotten that one as well. So that late in the day, you know, we're going into power hour. It gets real choppy. Signals are not as clean. But both of these, the upper and the lower, were good. Now we can look at how did it perform with the breaker. Well, here's your breaker on this one. This is the last down close candle on the way up. We pulled away with a fair value gap. We attempted to go higher, failed, and pulled away with a fair value gap. So that would also work with the breaker if you wanted to continue to use that as confirmation or confluence that we are lower. What if you use this one as a breaker? It would look like a to the tick touch, and you could do that because these were kind of a consolidation there. So you could use this one as your breaker, and it would be pretty algorithmic in that situation. I think it might even be to the tick. Let's just check it. Yeah, it just poked it a little bit and then pulled away with a fair value gap. So that could be your confirmation, but regardless of whether there's a breaker there or not, you really need to be looking at that lower high situation there and the fact that we did not fill the gap. Okay, so trading this and not focusing so much on the breaker but focusing more on the higher lows and lower highs definitely helped me this week. This situation we pushed down and then rapid back up with no chance to enter. It was a little tougher to trade, but look at our configuration. We came down, we swept some liquidity. This was a previous afternoon low. There, and this one here. And so we swept through all of that, and even this one here and that one there. Swept through all of that, and I had those marked on the chart at the time. And then with no opportunity to enter, we went straight back up. Now, if I'm focusing on this breaker, which is this one, the last up close candle before the run down, do I ever get an opportunity to enter? Because I would want to be entering close to this breaker because I've seen it go there before many times. Do I ever get an opportunity to enter? Do I even get close? We've got fair value gap here, here, here. Which one do you refer to? Well, the market referred to that one. But you don't know that at the time. It could still come down to these. And that's what was keeping me out of trades. I was kind of paralyzed with wanting to see the exact PD array that I was looking for. But look at that. This fair value gap right here, it's very small. But the wicks can go through it, it's fine. It's the wicks do the damage, the bodies tell the narrative. Look at how the candle bodies all respected that. But this is a damaging wick. You know, on NQ, let's see how many points that would be if, say, I got in at the top of that fair value gap. It's only 11. You'd have been fine. But, so, the breaker, we'd be expected to come all the way down here. It never made it. And then you got these fair value gaps, so why wouldn't it wick into there? Well, you don't really have the option of knowing that. And you also had the situation where we ran up, but we did leave this liquidity. We took a whole bunch more, but we left that one. That's another lower high. So still ambiguous at this point. We come down, we make a higher low. We go up, we leave this liquidity, we come back down, we make another higher low. Now we have something we can work with. And I do remember getting in this trade, and I do remember getting smoked right here. But there really wasn't a whole lot of places to enter here. It just ran. And it ran this liquidity, came back down. I don't even think it touched the fair value gap, but it might have, the one that it was referring to. Yeah, it touched it right to the tick. And then adios paya. We went and ran this high, and I think we eventually got that one. Yeah, we did. That was the afternoon low right there. So, choppy day. Hard to get involved. I ended up getting some money out of it, but it wasn't a whole lot. I think I ended up making a couple $100 this day. But this was hard because it was so... When you're having conflicting signals like that, where it's not taking the high, you don't want it to take that high if it's going to go more upside. But then when we get into this is what will eat your account alive. So I think in this situation, you're just going to have to take a few losses. Get in, move your stop to break even. If it happens to come back down, watch, wait. Do we make a new low? And then, it goes right back up. It takes that high and immediately rips right back down. You're at break even, you get stopped out again. At this point, maybe you're a little frustrated because you've gotten in decent setups, but you just keep getting stopped out. When it's ripping like that and you don't even have an opportunity to get in at a fair value gap, like right here, you could have gotten in, but I would have been expecting that high to get taken at least. But you could just aim for that one. But you could have gotten in here, but we haven't made a higher low yet, so it wasn't really an opportunity for me. But we did each one of these higher than that one, higher than that one. So it's giving you an indication that we're wanting to push higher. And so when we pulled away here, that's our entry. This is the first opportunity we had to enter right there. And then we just aim for that high or that high. And if you aimed all the way for the top, you would have got it. Gap fill was here. Did we get it? No, we didn't ever quite make it to the gap fill. So there's a tiny little RTH gap there. But so overall, I would say focusing on the higher lows rather than focusing on the breaker has been an improvement this week. Because I have really been struggling. This situation we made lower low, lower still, but overall still higher than this one. And then we pulled away with a fair value gap. You can aim for that high, and we're good. So yeah, that's a little ambiguous, but you could have made money there. I think I did make a little bit on this day as well. There was another day where I was watching silver, and man, when I went over the chart last week looking at silver, I noticed that it didn't follow these guidelines quite as well as I would like to have seen it, and I ended up losing a lot of money on silver early in the week. 'Cause it's a beast. One micro silver, if it moves 1 penny, and it does it in half cent increments, it's $5 for 1/2 cent and $10 for a full penny. And it's so volatile right now, it's moving $1, $2 a day. So you can make a lot of money, but if you're wrong, even on a small move, you can lose a lot in a hurry. This day, we came down, we swept something, probably something over here. Doesn't look like we left that liquidity. And then we came up and we took the high, didn't quite fill the gap, that shows weakness. We pushed back down and left this liquidity again. Lower high, pulled away with a fair value gap. We aim at least to there. If you have your 4-hour levels marked out, maybe you would aim for one of those. This one came to 50% of the week, which I always put on my chart. So that would have been a good run. But you can see, if we were looking at the breaker here, it would have worked out today. We ran that high, and here's our breaker. We didn't touch it to the tick, but we did respect it with candle bodies. The center point was respected. We pulled away with a fair value gap. You sell short at least to there, you're fine. If you're at break even, maybe you get stopped out right there. I probably would have got stopped out right there and been mad as a hornet, but either way, you know. So if you get in there and you're confident and you leave your stop and you just say, let's let this work out or not work out. I think in this case, I probably would have been confident enough to leave it and put my stop up here. Let's see what kind of stop I would have had to have. So that's only 9 points. I typically carry a 25-point stop loss on NQ. So that would have got me above those wicks. Yeah, that would have worked out. That would have been a good trade. But I wasn't trading NQ that day. I was trading silver, I do believe. But yeah, focus on those higher lows. Use the breaker as your confluence, but focus on those higher lows. When we reverse down here, did we respect the breaker? It's right here. The last up close on the run down. Right there. We did sweep the 50% of the week. I like to see it come back down and do the higher low thing. Did we ever get that opportunity? Not this day. This is the only higher low we had. So I would have missed this entire move. Unless you counted this as the higher low. If we were just focusing on this, we went up, we came down, we made a higher low. That's a fair value gap. We made another one. Pretty strong move. This to me wasn't a beautiful signal. It moved away too fast, but you know, it's also right at 11. This isn't bad, but it's, you know, nowhere near the breaker. And it really hasn't moved away. I like to see it go up, leave some of this liquidity up here, like to leave that one, and then come back down and fail to go any lower, and then aim for that or that. And we didn't get that. We didn't get that configuration. We swept this, swept that, almost swept that. This is our pullback, and then no opportunity to enter to sweep that guy. So yeah, this would have been a tough day to trade NQ. ES might have looked a little better on this day, December 10th. I think it did, and I think I traded December 10. Yeah. See how they look so much different on that day, December 10th. I think it was decoupled markets that day. Yeah, this is December 10th for, I'm on the wrong day. This day, December 10th. December 10th. Yeah. I'm still on a 5-minute chart over here. That's what the difference is. So here is December 10 on ES. Little bit cleaner price action than what we're seeing over here on NQ. This was the MOC day. But we did have a run up, swept the high, lower high, pull away, sweep the low. So you could have got a few points on that move. Let's look at it in 1 minute. I'm gonna have to be, let's box it in so I know where I'm looking. All right, so that's our price action. So if we're focusing on the higher lows rather than the breaker, I didn't get it all. Where did we open this day? Four. There we go. There's our open right there. Wasn't much of a gap at all, if any. 930 right there. Yeah, so not much of a gap. Nothing to really worry about on that. Same price action for NQ. So here we pushed down, swept some liquidity here, and then we started going up. NQ swept liquidity above and started going down. So we were decoupled at that point. So ES definitely was given better signals. We pushed down, we came up, swept this liquidity, made a higher low. So looked like we were aiming higher. We're early in the market there. I think I probably would have waited for this push down before trying to get in and maybe aim for that. But once we got up a little bit, kind of looks rangy. Definitely like that liquidity. We pushed down, but we left quite a bit down here. Higher low, still, right, lower high rather there. Came down into that fair value gap, took that high, left this one, and pulled away with a fair value gap. So you could sell there and just aim for that. Kind of a range play. Lower high again. Pull away with a fair value gap here. We could aim for that. So you would have gotten in here, might have got stopped out by one of these. Let's see. It was a choppy day. This is right ahead of MOC, and typically don't like to trade it. I don't even think I stayed. That's only 3 points. You would have been fine. Even with a 5-point stop loss, you'd have been fine on this trade. But I did not trade that day at all. I'd had 2 bad days in a row, and I was like, I'm not going to let FMOC take my money. I think I may have taken a trade in the morning, like maybe pre-market. But I know I made a little money that day, but it wasn't much. But you can see if you're focusing on the lower highs, we got lower high, lower high, lower high. And then you just sell a fair value gap and aim for the most recent swing. That's it. You can do it with a big size, you can do it with small size, but you want to keep your stops pretty short, pretty small. This one here, lower high, pulled away with a fair value gap. I think we got more than one. There's one there. That one's not one. No, we'd have to go all the way back up to here to get in. Might not have been able to enter there. But it definitely ran that low. I don't know. Tough day to trade. High resistance type of movement. Tough day to trade. And then once MOC came out, it was crazy. Big mess. But even here, higher low, pull away. Higher low still. You'd have been fine even in that. Getting in long right there and just aiming for those highs would have got you 5 to 10 points. Yeah. $12.25. If you trade a big ES, which is possible, 10 points is $500. So 12 points would have got you what? 600 bucks. Not bad, not bad. All right, so now let's look at this week. What are we going to do? What's it going to look like? Let's go to a bigger time frame. I did try to trade silver, and I did make some money trading silver one day, but I have not watched it enough to confidently trade it right now, and so I'm not going to mess with it. I got too much riding on getting this next payout to gamble with something I know nothing about. So yeah, I'm not going to trade it right now. So next week, let's go to weekly. What can we expect? I mean, we're really just kind of ranging here at the top of this all-time high business. They're both on 1 week. Yeah, we got them both sitting on 1 week. All-time highs here. We've just been kind of bouncing around. This is our October low. We came and took out, and then we went up and we've swept this wick right here. We took it. And I thought, well, we might start working higher. The Fed lowered interest rates, so we're going to start working higher for sure, right? And we took that high, and then we started pushing lower again. And we took out the low of last week. This is all NQ. ES, a little bit different situation. We swept both of those highs, and then we took out the high of the week, and then we started offering, but we've left the low of last week. A little bit different situation. So if we're looking at this being the all-time high, do we take these lows and then go run it? Or do we take these lows and offer back to October low? I still like these relative equal lows down here, but I would have expected them to continue to work down there. And I like these relative equal lows right here. They will be addressed, and this fair value gap right here will be addressed at some point. Don't know when, maybe next year, but it will happen. Promise you. The market will move down there and work this area before moving higher, before moving too much higher. But that doesn't mean we can't take the high, the all-time high next week. We could sweep these lows and start working towards it. If I'm looking at a 1 minute chart here, that's exactly what I would expect to happen. That we would sweep these lows at least, maybe even work down into here, I don't know, maybe half of this one, and then take that high. That's what I would expect on a 1 minute chart. But we're not looking at a 1 minute chart. We're looking at a weekly chart. Okay, so is there anything we can mark out here that would, you know, be say, okay, we're definitely trading there. I mean, this one doesn't even have a wick. It just went straight up. I mean, this, to me, that looks like we just swept that low. We're going to go run the highs, but we took that high first, so we could push lower. A little ambiguous as to which direction we're going to go. In order to remain bullish, I would think we would need that push up. We couldn't push much further down. As far as that week, I mean, it was just a complete range. Top of the range, bottom of the range. Maybe we stay there. Maybe we stay in that weekly range. The ES did run some major liquidity here and reject. So let's put a little Fibonacci tool on this wick on ES. And see what we got into here. Just the wick all by itself. We made it past the 50% mark. The candle bodies are working the lower quadrant of that wick. All staying below. I don't know if we could get any information from that at all. I just like to look at things like that. So, I don't know. Let's look at the daily and see if there's anything there that would say, ah, yes, we're definitely going this way or that. Okay, so on NQ, daily chart looks a little interesting. If I'm looking at a 1 minute chart, what do I see? I see us push up, come down, sweep the liquidity. We've gone up. Did we leave liquidity up here? We left some. We have a fair value gap here that hasn't been worked into on the daily chart right here. That fair value gap has not been worked into, and this liquidity has not been run. So based on that, if we're looking at a 1 minute chart, nice relative equal highs here, there. They will be addressed at some point. So what would we want to see a 1 minute chart do? We swept the liquidity, we pushed up, we left liquidity above, and now we're pushing down. So we would like to see it push down and make a higher low and then go run that liquidity. So what on this chart do we see that would be like, okay, I think that might be a stopping point? Well, we have this fair value gap that's been wicked into, but so far respected. And we have this volume imbalance that could be addressed. Those are the two things that stick out to me. Let's mark out that daily fair value gap here. So this candle body closed below the halfway point of that fair value gap. That's not good. It's not good for bulls. Doesn't mean we'll continue down, but usually candle bodies need to be respecting the halfway point. It can continue and up and respect it from here, but most times you want to see it respecting the halfway point of that fair value gap. And let me just make sure I got my lines correct. This one's a little bit off. Right there and there. Yeah, that's pretty close. And see, we dipped below it, just barely. And we also took out that low. So the next low hanging fruit would be either here, or that volume imbalance. I know I've heard ICT say that the market sometimes views this, when you see a big wick like that, as kind of like a gap. Usually they're overlapping, but this wick right here he would put quadrants on that thing and see how the market reacts to it. I would expect. But those are two features that I see. They're definitely, this one could be respected and then we run that, or we could offer a little lower into this volume imbalance. Now this is all NQ, which trades a little different. Let's just put, it's actually a new day opening gap, but I'm just going to put volume imbalance on the daily. Okay, I just fat fingered something there. Volume imbalance daily, and then this one we'll label it as daily FEG. And this would be daily FEG to the positive, so we'll just put a plus sign there. I'm going to copy that so I don't have to type again. And we'll just label this one the same, but we'll put it as a negative. All right. So yeah, if I'm looking at a 1 minute chart and this liquidity is going to be run, I'm wanting to see a higher low before we go run it. So I'm thinking we're going to work down into some of this prior to going up. Let's look at our 4 hour, and we'll do regular trading hours only. Before we do that, but I mean, we can do it, it doesn't matter. Regular trading hours only, 4 hour, we'll mark those out. And we'll make them red. And make sure you mark it, you know it's regular trading hours. We have this gap right here that still hasn't been filled, just below this one. We took out this candle, but we still have that gap right there. I mean, if you look at that on this 4 hour chart, these two kind of did trading in that area. Like when this one opened, it filled half the gap, and when this one opened, it filled half the gap to the downside. And so that's where we tested to and rejected. So there's a 4 hour low that could be targeted. We can mark a couple of more. We don't need to go crazy, but we can mark a couple of more here. This one right here is interesting to me. And look at, that's a gap up and a daily volume imbalance. That's interesting to me. Don't know if we'll get there, but it's interesting. Because this is actually a daily fair value gap right here that has been respected. Or that's a 4 hour fair value gap that has been respected. And that's our little gap. So that's interesting to me too. I'm going to mark it. I'll mark it with a different color. Could I go all the way to the top of the gap? I'll just put remaining. Yeah, that'll work. This is remaining RTH gap. What happened? go. Remaining RTH gap. And then we'll mark a few of the 4 hours up high. Well, there's one there. I need to get a good mouse pad. I'm using a piece of notebook paper and it just doesn't seem to slide well on it. Make it blue. And of course we have a regular trading hour gap here too. We opened here, pushed up. According to that, it looks like we filled it. But I didn't think we did fill it. On the smaller time frame, I don't think we filled it. This candle actually goes all the way to like 4:30, close of the market, where settlement's actually at 3:15. So it would show a gap on that smaller time frame. So we do have a small gap in here that we can mark out on a smaller time frame. And of course we have all that marked out. We can just clone this and mark these as relative equals. Go. So yeah, that's all I'm going to mark going into Monday for NQ. What I would like to see happen is that at least fill this gap, maybe take out some of this stuff so we have a higher low, and then we start pushing for these guys. That's what I'd like to see. Because December, 80% of the time in December, we have the Santa Claus rally. And so that doesn't mean we're going to the moon. It just means 80% of the time, price closes higher at the end of December than it was at the beginning of December. Still means 20% of the time that it does not. So keep that in mind. We could go high, we could go low. If we're looking at this from a bearish perspective, the market went up, made lower highs. We could offer lower. We've left liquidity. So you gotta look at it both ways. You can't get locked into one side. All right, here's our daily over here on NQ. Sorry, on ES. Yeah, I'm not going to do that yet. What features do we see over here that are interesting? We did take out some highs, and now we pushed lower. We took out this low, I think. Let's just double check it. No, we did not. So this low is 68.05. This low is 68.02. That is kind of an interesting little PD array right there. High or low? Do we go sweep the all-time high? Or did we sweep liquidity and now we're going to go and run the lows? We have copious amounts of fair value gaps to the upside, and then we stalled out. So let's see. We ran liquidity, and now we're pushing higher, but we've stalled, made a lower high. If this is the bottom, I would like to see it pull back on a 1 minute chart. I would like to see it pull back, make a higher low, fair value gap to the upside, and then sweep that high. But on a daily chart, maybe we just sweep these lows and we respect one of these fair value gaps and then run the highs. Or maybe this is our lower high. We do a fair value gap to the downside and we come in and sweep these relative equal lows or these relative equal lows. That will be addressed at some point. And December rally is a bust this year. If I'm a billionaire, I'm selling short to people that are believing that we're going higher for December rally. And I'm just holding on until we do drop. But, excuse me, I'm not a billionaire. So I'm just going to have to watch for those PD arrays that I look for with the higher lows. All right, so let's mark out a few things here. Very interesting. We filled this volume imbalance on the daily when we went up here. We filled it and then pulled away and left some lows. That's saying we gotta at least sweep this low. So let's mark it. That's a daily low. Wonder if it corresponds with a 4 hour. No. We'll just put it as a daily. And then, of course, we have this fair value gap that's been respected so far. We've got lots of daily fair value gaps. I bet if we went to the weekly, we could mark this out as a weekly fair value gap and save us some marking. Let's see. Oh, man. No, it's not a weekly fair value gap. It is not. Let me expand real big and see if there's a gap in between these two candles. High of this one is 68.01. The low of this one, 68.02. So there is a little bit of a gap there. Tiny little fair value gap. 1 point fair value gap on the weekly chart. I don't know if that's worth marking. We'll just leave it the daily. And if it gets traded through, then we'll go and focus on that one. But so far, it's been respected. But I think it's a safe bet that we're at least going to take 6,800 at some point this next week. Now, if we are lower high and we push down, we have not yet run this liquidity. When we run it, we should go up and make another lower high and then push down lower into these. Or we could just fall straight out of bed. Let's go to our 4 hour and let's mark some of them out. Because the market refers to regular trading hour highs and lows. I know I didn't mean to clone that. I want to copy it. And we'll paste it over here. And then we'll start marking some of these out. So the daily does not correspond well with the 4 hour, but it's close. We run that 4 hour, we'll run that daily too. So this will be the AM session low. And this is the PM session low. You can label that too if you want, because sometimes it'll take out the PM session and leave the AM session low and then go higher. But you can label it that way if you want to. It's up to you. Well, let's clone that again, and we'll mark out PM session high. Clone again. PM session high. Well, that's AM session high. And of course the high of last week as well. There we go. Now the last thing I like to do, and I do it on both of my charts, is I look at the entire week from last week. On a weekly candle, I think this is our high and this is our low right here. Probably this one. Let's look at it. As I put a Fibonacci tool on it the entire week. And I mark those quadrants out. Just like that. And then I label them. And I use a line to label them because you can't put a label on a fib. So always make consequent encroachment yellow. And then I just label it 50% of the week. You can put last week. There we go. And I'll just clone that one and move it here. I'll usually make it blue. And 75%. It doesn't. The 75 and 25 just really tells me, you know, are we above the 50 line or not? This would actually be 75% pullback of the entire week rather than this one. And then the highs and the lows of the week I also like to mark. It looks like I got an RTH on there as well. So I might delete the RTH. I don't know. I'll just leave them both. Looks like it's a little bit lower. Shouldn't be. I probably have my line off. There we go. And then you can delete the fib at that point. There. And now just leave your clean lines with labels. You could flip this one if you wanted to, because if we pull back all the way to here, that's actually going to be the 75. So this one will be only a 25. And this one's our 75. There we go. And we needed to label this. We didn't. There we go. Daily bullish fair value gap. All right, and then our last little thing that we need to do, you can go through and do this on any asset, Bitcoin or silver or gold or any of those things, and you can get a pretty good idea of where the market's going to be trading to, or possibly trade to. I mean, it's nothing's 100%. So let's do that same thing we did over here. We'll just mark it out over here on NQ. You can actually just copy and paste. Make sure we get the bottom of this candle. I'm going to expand this out a little ways so I can see for my fib tool, then I'm right there on the bottom, and it looks like it's going to correspond perfectly with that 4-hour RTH as well. So you can just grab this and copy it. Whenever you copy, you have to make sure you're hovering over a candle in order to paste. If you try to do it somewhere else, it won't work. And looks like it put us right here, so we need to move it up to here. And I don't know why it made it stretch all the way across the daggum screen, but it did. So last week's high, right there. We'll copy this one. And we'll put it at the 25 on the fib. This fib's just upside down. Put it there, and then we can just clone and put that one there. Change the label. And then we can copy this one. Mm-hmm. 50% of the week. Right there. Delete our fib. And there we go. I think we're ready for next week. Oh, we don't have the low of the week. Let's get that one. No, wrong one. I think I need to just label those last week's low and delete the 4-hour thing. We'll just know that's the same thing. Alright, there's last week's low on this one. There we go. Beautiful. I'm gonna kind of shrink this down a little bit where we can get them both on the same, and then you can take a screenshot or just pause the video and you know, get these levels marked out, or just, you know, look at your chart and just, you know, mark them out. Watching me do it is one thing, doing it yourself, completely different thing. So you really need to start doing it yourself in order to get proficient at marking levels, and you'll find you get these on your chart, they can be pretty well trusted. I've seen 50% get touched so many times and then market reverse right there. Oh, we saw it on Friday. The pullback was to the 75% mark, and then it went and continued lower. Prior to that, we would go to the 50% mark and bounce back up. So mark those out. It works the prior week, it will work those quadrants. You can see last week was pretty much even with this week. And if you put it on like a 30-minute chart or something like that, and compare it to the quadrants that it was working, we went up to the high, you know, we went to 50%, back up, came down to the low, went back up to the 75%, and then started pushing to the low. And that would be the previous week's price action. So it does like to work those quadrants. If you had last week's fib on here, I'm not going to put it on here to show you, but if you had it on here, you would see these levels here. Like this would be the 50% of the week, and this would be the 75%. And this would be the full week about here. I think the full week was right here. We pushed through it and then, you know, started working back up. We went to 75% and then finished, you know, right there. So yeah, mark those levels. I've been struggling with Asia session, so I'm probably not going to do it anymore. New York is just so much more active and so much more volume. Asia session can do all kinds of weird stuff and it not even affect the price movement of the New York session. So I think I'm going to try to stay away from it and just focus on the New York session, focus on the market making a taking out a buy side and then making a higher low, and then buy that fair value gap away from that higher low, a lower high rather. I keep it messing those up. And then on the reverse side, if we take sell side, focus on that higher low and then the fair value gap away from that. So if you didn't watch that silver video, make sure you go watch it, because I explained that PD array in there quite well. I could show you that right before I get off here. Yeah, let's just pause it right there. I don't know if there's a way to zoom on this or not. Yeah, that's it. That's what you have to see in order to get into a short or to get into a long. You want to see that configuration right there. So we're going up. We usually move up in legs. It may be 4, maybe 5 legs. We take buy side, and then we fail to go any higher, pull away, fair value gap. Whether or not that touches a breaker, that's what we're really looking for. And the same on the bottom. So, yeah. I think I'm going to call it right there, ladies and gents. Hope you enjoyed the video. Hope you learned something. I hope you make a whole lot of money next week. Talk to y'all next time.